All right, what is up, traders? Super excited for today's video. We got to talk about Moonriver. Okay, Moonriver has absolutely exploded, guys. Okay, this thing just skyrocketed up to 44. All right, we are seeing a pullback, but we're going to go over some of the healthy consolidation levels and some of the key areas of support that you guys really need to pay attention to so you don't miss the next big move up. Right, we're looking at a weekly time frame right now, and you can see how long this thing was squeezing, right? Pretty much the entire time that the bear market ended, in the stock market and as well as in Bitcoin, in around October of 2022, Moonriver wasn't really doing anything, right? And you can see on the Bollinger Bands here, it was squeezing, squeezing. That's what these three lines are right here that you're looking at right here, right here, and right here. You just see them squeezing, 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 and we finally fired off after the very long squeeze, right? Typically, the longer the consolidation, the longer the move up. And if we take a look at a weekly time frame, things look very, very textbook from a technical analysis standpoint, right? Old support comes new resistance, right? So, 44 is that key area that we really want to get above. And if we can do that, then, it's very possible 66 is going to be the next area that we're going to be looking at. Now, we'll break down the chart further, but as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So, be sure to read through the disclaimer, and we'll go ahead and come back over here to the charts. And so we broke down, essentially what we were looking at on the weekly time frame here. Okay. Some of the key levels that we're paying attention to. If we were to zoom in a little bit and go, down to a daily time frame, which we'll do here, very shortly. But what I want to emphasize, okay, is just the structure, right? So, we have the key levels here. We talked about old support becomes new resistance, new resistance. As soon as we can break through here, that's going to be a very, very good look. All right. But what's really interesting here is that this area of resistance here in the past also aligns up with our 764 retracement. Now, if you're not too familiar with the Fibonacci levels, okay, basically, everything moves in an uptrend or a downtrend, right? This is very obvious, okay, but it doesn't move in a straight line up or in a straight line down. What you get is a move up, retracement, continuation higher, or a move down, retracement, continuation lower, okay? And so now that we've had this massive move to the upside, guess what we've already started doing? We've already started retracing. So you use the Fibonacci levels to identify your major retracement levels of support to determine whether or not you're going to continue the uptrend or whether you're going to reverse, right? So, you move up, you retrace, continue the trend, or, if you move up and you pull back and you start to consolidate and break through those retracement levels, then that's going to be a clear sign that you're potentially going to retest some of the previous lows, if not, break through the previous lows and continue a downtrend, right? So, I just wanted to get that out of the way really quickly. All right, we'll go ahead and zoom into a daily time frame real quick, okay? And come over here to the daily, just so you can see things a little bit better and understand the structure a little bit more, right? If we were to take a look here, all right, and you can see that 28.83, 24, 19.7, and 13.195. Let's just call it 13, round number. All right, those are going to be the key areas of support that we want to pay attention to. Now, when we zoom in here and we see that, what we've done is we've had a very impulsive and very explosive move to the upside, right? We came from, $6-7 all the way up to 44, just an insane massive rally. And now it makes a lot of sense that we're getting those pullbacks, right? But even here on the daily, you can see we wick up to that area. So that was an area of liquidity, and a lot of profit taking there and some sellers stepping in, and we're pulling back and just consolidating right now. So typically you would look, all right, for an A, B, C. Okay, so a three-wave structure is very healthy for a correction. All right, so your trend typically moves in a five-wave structure. So you get a 1, 2, 3, 4, 5 up, and then after you get that, you'll get an A, B, C to the downside, right? A correction over there. And understanding these concept, guys, is going to really help you guys out. Okay. It's been really fun trading crypto again, especially for someone who trades leverage. I'm not recommending you to do that necessarily, because that's, very, very risky. But, for me, to someone who can handle, the volatility with it, I mean, it's been a blast, guys. And I'm very excited that Moonriver is finally waking up here and we're seeing these explosive moves. So, we've technically looks like we've got an A down, a B up, and we could get a C down. Now we would look for it to hold the key levels right here and here. So we talked about 13. And then if we just zoom back out a little bit over here, okay, it was about 19.17. So let's just do round numbers. Okay, 19 and 13 are going to be those key levels if we do see a little bit more of a pullback. Okay, now we've already made a retracement to the 50% level. That's very, very healthy. All right, and we pull back, retrace, and we'll see if we can continue going up higher. Right, that's what we're going to look for in the meantime, is whether or not we're going to, essentially be able to hold above 24. If we break below 24, we know that 19 and 13 are going to be those big levels. All right. Now, if we, just simply look at the Bollinger Bands, right, we see that the middle Bollinger Band is all the way down here. It's basically right in between 19 and 13. This is going to continue to trend higher a little bit. Right now, it may start to flatten out, but this will continue to go higher. And so if price comes down, you will see it come up closer towards that $19 area, and that'll give us even more support. When you're trading outside of the Bollinger Bands, it's very typical for you to see price action coming within them. You can see the same thing over here. We're trading outside the Bollinger Bands, and then we snap back in, and we end up holding support along that middle Bollinger Band. Okay, so that's something I'll be looking for. It's very possible that we can just continue our explosiveness to the upside. But if we do that, we want to be really mindful that currently we basically are fighting 28.8. All right, we need to get above there. Let's just round that up to 29. All right, so we need to hold above 29. And then if we can do that, there's going to be a little bit of resistance. If you take a look right here, and we're to just draw some lines, you can see that, essentially what we did was, we tried to act as this level as support, and then it was resistance here, and then it was resistance here. So, that will be another key level for you guys to pay attention to the upside is going to be 32.5. And, if we can get above there, it's very low. It's choppy market structure, right? And so what do I mean by that? Well, above that level 32.5, we just have wicks here on the daily time frame. So it's not like there's a whole bunch of support and resistance levels in between 32.5 and 44. And it's very possible we could see, a little bit. Some people may try to call that maybe a fair value gap. Right. And you could say you have a fair value gap down here to come down and fill, and people will tell you that that fills every time. I necessarily don't, focus too much on fair value gaps. It's something that I try to pay attention to, be aware of, but it's not something that I'm going to base the whole foundation of, my trades on necessarily. Right. So, things look good right now. All right. And I basically just want you guys to understand that, unless you bought this move at the very top, right, up at 44, and you saw it drop all the way back down to 20, and lost 50%, this is a very exciting time, right? And so, you want to be cautious, and, you don't ever want to be the person that's typically buying something when it's trading outside of the Bollinger Band, right? If you see it, this massive move up here, and you're buying up here outside of the Bollinger Band, and you end up selling just because we come back into the Bollinger Band for a 50% loss. And then what does it do? Well, it runs up again right after that, another 30%. It can be very frustrating. So, that's why I'm trying to just go over some of the basics when it comes to technical analysis. So that way you guys have a better idea of, buying and selling and some of the key levels and strategies that you guys can use that are, very old. It's not like I invented these things, and many people use these. Trading in crypto as well as the stock market is largely algorithmic. Okay, so whether you believe it or not, 60 to 70% of all trades are executed by buy and sell algorithms. And so you want to know some of the parameters and some of the things that these algorithms are going to be working around. And these are just a few that we went over in today's video. Hopefully you enjoyed it, and I'll see you in the next one.